Hello, class. This video should help you to complete the problems for problem set 5.2, which is also project 2. And these really shouldn't take that long. There are 3 problems that are problems and then 3 discussions. Just briefly want to cover this. This is on page 609. It requires the transaction gains and losses on intercompany receivables and payables be recognized in the period that the exchange rate changes. However, a company is required to distinguish between transactions that are of long-term investment nature and other transactions. Intercompany transactions for which settlement is not planned or intended in the foreseeable future are considered a part of the net investment in the foreign entity. So accordingly, those gains or losses, whether denominated in dollars or in local currency, are deferred and accumulated with the translation adjustment in a separate component of stockholders' equity. However, a transaction gain or loss attributed to other intercompany accounts is reported currently in the determination of net income because it is expected to affect functional currency cash flows. Profits and losses attributed to intercompany sales transfers are eliminated on the basis of the exchange rate at the date of each sale or transfer. Here again, the use of averages or reasonable approximations of specific rates in effect on the due date of each transaction is permitted. So again, this really should be one of the shorter problem sets, especially after last week. I'm going to do this middle one here. If you can do this one, you can do either of the other two, and that'll get you right on your way. So you're given certain information. Ownership is 80%, inventory cost, inventory sales. So the difference between these two, of course, would be profit. Here's the exchange rate on the day of the inventory sale. Here's the exchange rate on the balance sheet date. And here's a percentage inventory remaining. So the first one is to calculate amounts in inventory in the subsidiary's translated balance sheet. So to do that, we first convert this back to the local currency on the date of the sell. All right, and on the date of the sell, it was at 0.5192. We divide that number and we get the local currency. Now we have 50% of the percentage inventory remaining. So now we have to convert that to current dollar amounts. So that is the current exchange rate. So the answer is 14,620. So now we look at the AP. Similar process, all right? But all of the AP is still in there. We haven't paid that. So we've got, again, going to convert that to the year-end exchange rate times the year-end exchange rate. And so that gets us 30,400. So measurement of accounts payable. All right, so at year-end, our balance in local currency was 60,873. And on the date of transaction, it was 58,552. So that gives us a transaction amount of loss of 2321. Because the year-end rate, this is a payable, which is a liability, and the liability increases. So because that increases, we have to credit that, and then we debit transaction loss, and a debit of a loss or a debit of a revenue is a loss. And now we have to eliminate intercompany profit. So again, the profit is going to be this 6,500, but only 50% of the amount remains. So the intercompany profit is 3,250. The last one is assuming that the transaction had been denominated in Martian credits rather than dollars, compute the transaction gain or loss that would be reported by the parent company. All right, so we've got this Martin credits of 52,748. And so year end, we have 26,342. And that's just strictly the year end balance sheet rate. And then we look at the rate that existed when the transaction was made. Okay, so all we're doing is making the conversion of end of year and the conversion of during the actual date of transaction. And because the end of year amount is less than the original transaction date, that is a transaction loss. So this is fairly short, as I said. If you just follow the formulas here, this problem set shouldn't take you too long, at least the problems. And then there are 3 discussion questions that you'll have to be ready for as well.